Good morning, everyone. A very warm welcome to the Direct and Indirect Taxes Monthly Updates organized by Taxguru. I would like to introduce our speaker, Mr. Vivek Jalan. Mr. Vivek Jalan is qualified chartered accountant, qualified LLM, and LLB. He is the chairperson of the Indirect Tax Core Group of the CII. Also, he is the chairperson of the Fiscal Affairs Committee of BCC and I. He is the regular speaker of various professional forums on the key area of direct and indirect taxes. During the session, please put your video and microphone off. If anyone has any query, please write in the chat box. We will answer you all queries at the end of the session. Now we will request our speaker Vivek sir to take the session forward.
Thank you, Moshmi. Am I audible?
Yes, sir.
Okay. I'll just share my screen. Is the screen visible, Moshmi? Moshmi, is the screen visible?
Yes, sir. Screen is visible.
Okay. So, thank you to Taxguru for partnering with us and holding our next direct and indirect taxes monthly updates webinar. Thank you to all the participants for the overwhelming response once again to this webinar. And while some more participants would be joining, yet, like always, we would want to start on time and we can have the other participants joining also. Friends, now this direct and indirect taxes webinars now are a regular feature. And also, since there are so many developments under GST, customs, DGFT, income tax, international tax, now the global minimum taxes are also coming, and you would be seeing that there are regular updates on the global minimum taxes. And after the G20 has been constituted with India taking the lead over there now, and India presiding on the G20. So this global minimum taxation is now another big development in the field of taxation globally. As of now, the global minimum taxes are applicable only to very large companies with turnover of more than say 20 billion dollars or so. But slowly you will see this global minimum taxes also evolve and be applicable to the smaller companies also. Recently, we had discussions with Ministry of Finance, the Prime Minister's office itself, and what it seems that the government is also aligned to amend to totally rewrite the Income Tax Act altogether, because it is felt that the Income Tax Act itself has become outdated. In the meantime, GST is also settling down, and the you are seeing the revenues from GST are settling down at 1.5 lakh crores. If it goes on at this level, uh, if some of you have seen the fiscal deficit and our budget, the calculation, it is expected that tax revenues would be over and above budget by 4 lakh crores. And because of the tax buoyancy, the government is able to spend more on capital expenditure which in the next year, when we are seeing that a global recession would hit India also in some form or the other. So this capital expenditure, due to the buoyant tax revenues, that would help India to counter the global recession going forward. So friends, in this backdrop, tax professionals, whether you are in industry, whether you are in your consulting, your roles are very, very important as the department goes aggressively on the taxation front, whether it be GST, whether it be CGST, or the state governments, they are all going aggressively now on even the slightest of issues with compliances in GST. Similarly, now we are seeing in income tax, international tax also, that due to this data analytics in the form of AIS, TIS, interlinking of GST with the income tax, the income tax department also is getting all the data with the data sharing mechanism, and therefore we as tax professionals have to be constantly updated with the changes. We have to be constantly in touch with the department, the litigations which are going forward, the new developments, because now India has become one single village. And by and large, all the tax departments are working hand in hand so as to ensure that the optimum taxation revenues are received, and entire organized structure in the country is working cohesively. So, friends, in this backdrop, we have had these seminars, and now every month we are going to have the direct and indirect taxes webinars. And thanks to Taxguru for also partnering with us, as I said, so as to make the seminars a success and for helping maximum dissemination of knowledge. We have various things to discuss, and therefore we will go directly on our first topic for the day. Friends, if you are an exporter or if your client is an exporter, somewhere or the other you would have dealt with, or you would be dealing with the issues by the DGARM. Now again, DGARM has their office in New Delhi. They are the Director General of Analytics and Risk Management. They are based out of Delhi, and they are responsible for the entire data analytics for the Ministry of Finance, etc. You would have all encountered something called risky exporters. This risky exporters issue all started way back in October, November 2019, and finally an SOP was issued in January 2020 on risky exporters. So as per the SOP, what are the risky exporters? Well, risky exporters are those where the DGARM gets an information on an exporter that possibly there is some issue with the exporter. Maybe he has taken more drawback claims, maybe he has taken more RODTEP claims, MEIS claims, or GST refunds, or even if the DGARM, Director General of Analyticals and Risk Management in Delhi, they get some information internationally that some country has tagged your exporter who is their importer adversely. So they also tag the corresponding Indian exporter as a risky exporter. Once you are tagged as risky exporter, as per the SOP dated 23rd of January 2020, 100% of your packages on the ports, they are opened and verified. Your GST refunds are blocked. Your RODTEP MEIS claims are blocked. Your drawback claims are blocked. Your GST refunds are blocked. Now, once you are tagged as risky exporters, those of you who have faced this or are facing this, what happened is that your file was transferred to your GST commissionerate, and they would start an inquiry against you, and they would inquire your ITC, etc., etc. If they were satisfied, it would be a mega assessment, right? I am terming it as mega assessment because in assessment, the scrutiny is limited, but here, when you are tagged as risky exporters, the commissionerate has to give an NOC to the DGARM, and therefore it would be a mega assessment. And even those issues which were otherwise ignored during assessment, even they would not be ignored, and detailed scrutiny would be done. So even after this, once the commissionerate sends an NOC to the DGARM, no officer in the DGARM used to take the risk of untagging the exporter, and they would start what is called a L2 suppliers or L3 suppliers inquiry. What is L2, L3 suppliers inquiry? Well, they would go to your supplier to see whether there is any issue with your supplier. And you would not even know, your commissionerate would not even know which suppliers they are inquiring against. And finally, High Court used to be the only option. There are hundreds of such cases which have been solved only in the High Court. Once the High Court used to issue an order for untagging, then the DGARM used to untag these exporters from the risky exporters tag. So now from September, what has been done due to the huge issue in risky exporters case, the Ministry of Finance, CBIC, has issued the instruction and with the amendment in the rules that, okay, even in case you are untagged as risky exporters and your GST refunds are stuck, so automatically from the ICE gate with payment of duty, claims would travel to the commissionerate. The commissionerate would sanction this refund as per without payment of duty refund process. That is, they would check your ITC invoices, etc., etc. No deficiency memo would be issued to you, and an RFD01 would be automatically generated. Now they have issued instruction number 4, 2022, very recently. Codify this whole process. Friends, well, this process, to say the least, will become all the more stringent. However, what DGARM, Ministry of Finance, has done by this instruction, we would discuss this and make you understand, is that the entire responsibility they have transferred to the jurisdictional proper officer to whom the file is transferred for generating the refund. Not only this, they have required, but see, if this jurisdictional proper officer to whom the file is transferred automatically from the ICE gate to generate the refund for this risky exporter, in case he sanctions the refund, he cannot do it like that. He has to give his recommendation, feedback that, gentlemen, I have sanctioned the refund and I recommend that the risky exporters tag be untagged for this exporter. Or if he does not give this feedback of untagging, he has to say, okay, I have generated the refund, but I would still recommend that the risky exporters tag be remain. Now, how does this jurisdictional officer do that? Let us understand. So what does the instruction number 4, 2022 state? It states that the jurisdictional proper officer, JPO on your screen, he verifies the correctness of the ITC taken and utilized. He verifies the genuineness of the exporter, and only then he sanctions or holds or rejects the claim. All three options are open in front of him. So he does all this. For doing all this, he has to abide by the 60 days timeline. Within 60 days, he has to verify genuineness, correctness of the exporter as well as his claim for refund of GST, and he has to make an order. He can sanction the refund. He can withhold the refund under section 54 subsection 11 of the GST Act, or he can reject the refund. Even if he takes the risk on himself, he takes the mental that, okay, I will sanction the refund because I am totally convinced with the refund claim. He has, of course, the option of physically verifying the premises of this exporter. So in addition to all the procedures which is done normally for sanctioning without payment of GST refunds, the proper officer has got the option also to physically verify the premises of the risky exporter. So one more layer added to the verification of the refunds. After all this, if he takes the mental on himself that he wants to sanction your refund, he cannot do like that. He has to provide a feedback that yes, I have sanctioned the refund and the risky exporters tag be untagged, or he can provide a feedback that although I have sanctioned the refund, the risky exporters tag should remain. In whatever case, this would be subject to CAG audit. The chief commissioner has to closely monitor the claim for refund and the sanctioning or rejection of the claim for refund. So friends, after doing all this, the report goes to the DGARM, and thereafter the DGARM can untag or keep the risky exporters tag still tagged. So friends, whether this process has been simplified or whether this process has been further complicated, all the risky exporters who are tagged as risky exporters, they have to see how this process unfolds on the ground. However, our respectful submission is this mechanism of an official feedback from the jurisdictional proper officer would certainly create a hindrance for approving the claims, and still we could be seeing that a host of claims are rejected, and if they are rejected by the JPO on the field, then your risky exporters tag will get all the more serious, and it would become all the more difficult to get it untagged. So friends, next issue is the current set of extensions to the time barring period under GST. We would be discussing all our agenda points, right? This is linked to your input tax credit, and that is why we are discussing this. So we would be discussing how to reply to notices. We would be discussing income tax 194H issues, the 142(1) issues, etc. Now, what has happened? We all know we have all filed the current month's GSTR 1, GSTR 3B. That the time barring period for taking input tax credit under section 16 subsection 4 of the CGST Act, that has been extended from 20th October of the next financial year. Why I am saying 20th October? It's because the time barring period earlier was the return filing date for the month of September. So the due date is 20th of October, or once you file the return before the due date. Now, 20th October due date has been extended till 30th of November, right? Similarly, for rectification of the invoices, the due date has been made as 30th of November. Rectification of the invoices for financial year 21-22. Also, for issuing of credit notes with respect to invoices of financial year 21-22 has been made till 30th of November, right? Now, friends, our legal submission in this respect is as follows. Let us discuss the first case of taking input tax credit in extended time bar period. Although your time barring period was till 30th of November. Now, say for example, you are a compliant taxpayer. You file your GSTR 3B for the month of 31st October on 20th of November this year, right? So you take the credit for financial year 21-22 invoices while filing the GSTR 3B on 20th of November. However, mind that as per law, you can still avail the credit till 30th of November. However, the GST portal allows you only till 20th of November because you are a compliant taxpayer, right? From 21st of November till 30th of November, the GST portal does not allow you to file your GSTR 3B again or revise your GSTR 3B. As per Circular 26, read with the Honorable Apex Court's judgment in the case of Bharti Airtel, you cannot revise your GSTR 3B of the same month. You can only revise it by the next GSTR 3B, which you will be filing till 20th of December. However, assuming you are a non-compliant taxpayer, you delay filing the GSTR 3B till 30th of November. Then the GST portal allows you to take the input tax credit for the invoices of financial year 21-22 till 30th of November. Our legal submission before this August gathering is, does the machinery provision, that is the GST portal, restrict a compliant taxpayer to its disadvantage against a non-compliant taxpayer? In case of a compliant taxpayer, it does not allow him to file or take the credit for 10 days from 21st November till 30th of November. Disadvantage against a non-compliant taxpayer who can take the credit till 30th of November. Our legal submission again is whether the GST portal, which is the machinery to implement the CGST law, treats a compliant taxpayer unequally vis-a-vis a non-compliant taxpayer, which is not as per the mandate of Article 14 of the Constitution of India. Friends, these are our legal submissions, and if we have also the YouTube video on this. We have deliberated this in many forums, and we need to see whether in this return for 20th December or 11th of December for GSTR 1, whether we are allowed amendment of our invoices or taking the credit of 21-22 financial year invoices or not. In case we are not allowed, then possibly we need to look at the higher authorities as compliant taxpayers and citizens of the country. Similar is the case with rectification of invoices under section 37. Similar is the case with issuance of credit notes for financial year 21-22 invoices, where after you file your GSTR on 11th of November, then for the next 20 days, while the GST law allows you to file your invoices or amend the invoices by credit note, you are not allowed to do so by the GST portal, which is the machinery to implement the CGST law. Friends, another issue in this is there a conflict of the GST law to this extent? The other parts of the GST law. Our legal submission is the GST law tells you, the other provisions tell you that for whatever transactions you have incurred till 31st of October. I will give you an example. So, till 31st of October, if you have passed the credit note in your sales register, your credit note register in your books of account. So, your credit note date, only if it is 31st of October, you can take the effect of that credit note in the return to be filed till 11th of November, right? So, in case you issue a credit note on 1st of November, as per the provisions of the GST law, you can only take the impact in the GSTR filed for the month of November till 11th of December. Correct? However, the instant amendment in section 34(2) allows the taking of impact of the credit notes which are issued before 30th of November till 30th of November. Friends, again, this seems to be a conflict because for all practical purposes, the department would allege in case you issue a invoice credit note on 1st of November, your credit note date is 1st of November, or the ITC you have taken is with respect to an invoice which you have entered in the 3B on 1st of November, or you have made a rectification on 1st of November, practically the department would dispute that, gentlemen, because you have done all these amendments, right, on 1st of November, you can practically take it in the return to be filed in the month of December. To this extent, one, as taxpayers, to avoid litigation, you need to be careful. You need to take all the impact in your books of accounts till 31st of October. But if you have, for any reason, passed such credit note or made a entry in the books of accounts on 1st of November or thereafter, then you need to be sure of the way forward in the light of this conflict between the GST law, which is our legal submission. Now, again, many taxpayers have got this kind of notice from at least the state government of Punjab and West Bengal, what we understand, and also in Telangana, we understand somewhat. The notice was that all the amendments of financial year 21-22, you have to take the impact in the GSTR 3B to be filed till 20th of November, right? Because of the circular 170. This is because the state government was losing revenues. Well, this issue is now over. So we'll not get much into this. So what are the issues now as per our agenda? There are various notices which are flowing in with respect to input tax credit, and as we discussed, the ministry still feels that input tax credit availment in the country is very high, and the input tax credit availment percentage should be further reduced to make it aligned with the GST law. So friends, if we are thinking that the input tax credit scrutiny would be reduced going forward, well, let me tell you, it would more and more increase, and we need to be more and more careful about our input tax credit. And therefore, we have chosen this topic as of now as not only how to reply to the notices, we should ensure as consultants that our clients do not get notices. If you are a professional which is working in the GST department of your company, you should ensure that your company does not even get input tax credit notices. And if there are many officers also in this forum who are attending this, so if you are an officer, of course, it is in best interest that you advise the taxpayers how to do best the ITC compliances. And in this slide, there is one amendment which has been missed, I would say, discussion in all the forums. There are many discussions across on the amendments which have been made effective from 1st of October. But friends, I would say that this amendment has been missed in many of the forums. An amendment to Rule 36. Now, many of the taxpayers, they have asked me in the COVID times that, sir, do we take the input tax credit on the basis of scanned copy of the ink signed invoices? Our submission always to them has been that it is not a duty taking document. Please get a digitally signed invoice, or you get a hard copy of the ink signed invoice. Friends, Rule 36 has been amended, and now all the requirements of Rule 46 of the input taking invoices, as per Rule 46, there are certain requirements which the supplier's invoice should have so that you can take the input tax credit. Previously, there were some requirements which were relaxed, requirements to the extent they were not to be disclosed in the GSTR 2. But now they have made an amendment to Rule 36 where they are saying all applicable particulars, please see on your screen the amendment in brown on Rule 36. All applicable particulars as per Rule 46 should be there in your input tax credit invoices, including signature of the supplier should be there, which is a mandate as per Rule 46 for you to take the input tax credit. In case you skip any of this and take the input tax credit, it is our submission that the same may be allowed by the department during the time of assessment, especially after this amendment with effect from 28th of uh, 1st of October 2022. So from 1st of October 2022, the GST departments in the companies, the consultants, you need to be more and more careful of the seeing the invoices. Also, friends, we are having so many search and seizure cases we are handling. We are seeing so many assessments, across the country, GST audits. Now, all the tax officers want to see the invoices copy. Also, they are not relying merely on the GSTR 2A or 2B reconciliation. So, we need to take note of this. Rule 37 has also been amended from 1st of October 2022. Now, you see, this is a very, very difficult amendment to follow, I would say, whereby even in case we all know that in case you do not pay your suppliers within 180 days, then the extent of non-payment of the supplier, you need to reverse your input tax credit interest. After this amendment, say your supplier bills you for 100 plus 18 rupees GST and you have not paid on also the part amount to the supplier, then you need to reverse the entire input tax credit after 180 days. Not only the proportionate part. They have deleted the word proportionate from Rule 37. So we need to be careful. Trade associations, the members of the trade associations, please beware and let us represent through the trade associations. The Finance Act 2023 would soon be passed. The finance bill would be tabled in the budget is on way. And we all know that the GST Act is amended only in the budget. The GST Council only takes care of the rules, etc. While it is an amendment as per the rule, but let us represent before the Ministry of Finance to amend second provision to 16.2 only, so that this rule 37 would automatically be amended. Otherwise, this would create a huge issue. I would tell you going forward, there would be a T number of litigations due to this amendment of Rule 37. A very, very frequent notice nowadays is that, gentlemen, your ITC for imports or ITC for imports from SEZ, that is not reflecting in your GSTR 2A or 2B. So please reverse the ITC. Gentlemen, in our respectful submission, please note the contentions. Many of the state governments, specifically, as well as certain central government officers also, they are disputing this. And sometimes they are adamant and there are huge demands. Our respectful submission is these are paper demands. This will not sustain because all the preconditions as per 16.2 are met. There are certain glitches by due to which your import bill of entries ITC figure or your SEZ supplies inward to DTA due to the glitches in ITC that is not reflected in 2B. So one way, of course, is to go to the ICE gate and fetch your bill of entries. Then they will be reflected at least in your 2A, if still not 2B. But even after fetching your bill of entries from the ICE gate to your 2A, 2B, still there are certain bill of entries which are not fetched in your 2A or 2B. But in our respectful submission, section 37, which is referred to by section 16.2. Section 16.2 says that 16.2 AA that you can take only that much of ITC which is reflected in GSTR 2B. Fine. But reflected in GSTR 2B, the corresponding filing of GSTR 1 by the counterparty, by your supplier. And as per section 37, if you go through section 37, with respect to bill of entries, the suppliers are not at all required to file their bill of entries. Even SEZs, they are not required to file their bill of entries. So friends, section 16(2)(ba) read with section 37 requires that the supplier need not file its bill of entry even for an SEZ supply, leave alone imports or their exports. And therefore, our legal submission is that there is no mandate as per section 37 read with rule 36 for the ITC as per the bill of entries to reflect in your GSTR 2B for taking the credit of input tax with respect to your imports as well as your imports from SEZ. The legal submissions are on your screen. You can replicate this in your reply to your notices. Now, in Bangalore, when I represented before one of the honorable jurisdictional assessing officers, his requirement for SEZ was that you show me law. So I showed him law, section 37, rule 36, etc. For this point, he said, no, I need further law. It was a import from SEZ by the DTA taxpayer whom I was representing. So friends, if this kind of issue is there, then instruction number 9 to GSTR1 on your screen should prevent you, and you can take shelter under instruction number 9 for of GSTR1, which does not require the supplier in case of supply from SEZ to file with respect to supplies to DTA, and therefore there is no mandate for the input tax credit to be available in your GSTR 2B for you to take the input tax credit with respect to imports from SEZ. Friends, there is a circular on fake invoices, right? You have all gone through that. Now there are various issues for which you are getting notices. We would discuss these issues one by one quickly and our legal submission with respect to these issues. Well, first of all, the general issues before we get into specifics. So, GSTR 2A versus 3B mismatch. Of course, from 1st of January 2022, we all know that it is a mandate that in case your input tax credit does not reflect in your GSTR 2B, you cannot take the credit. So 1st of January 2022, thereafter, the hands are tied by the law itself. But before that, our legal submission is there was no mandate to match the GSTR 2A with the GSTR 3B and only then take the input tax credit. In October 2019, even after October 2019, after the invocation of Rule 36 sub Rule 4, even after that, the mandate was that you can still take a cushion of 5%, 10%, or 20% during various periods. You can take an excess of 2A credit. Even the Honorable Apex Court in the case of Bharti Airtel has, while the case of Bharti Airtel was decided against the taxpayer to the extent of rectification in the GSTR 3B is concerned, yet the Honorable Apex Court laid down a cardinal law. It answered a cardinal question that till 31st of December 2022, the books of accounts, that is the purchase register of the taxpayer, was the register on the basis of which the input tax credit could be availed by the taxpayer. No matching with GSTR 2A was mandated as per the decision of the Honorable Apex Court in the case of Bharti Airtel. Further, Section 42, erstwhile 42, now Section 42 has been scrapped so far. I'm all talking before 31st of December 2022 in case you get such a notice. Section 42, subsection 3 requires that even in case there is a mismatch, then the department has the mandate. It is mandated by the Section 42, subsection 3 that the department should go to the supplier also. The department should go to both the recipient as well as the supplier. It just cannot come to the recipient and ask to reverse the input tax credit. Well, the CBIC press release in May 2018 also read with the Honorable Madras High Court judgment in the case of DY Beetle Enterprises and the Chhattisgarh High Court judgment in the case of Palco. It states that only in 3 cases the supplier is insolvent, the supplier has closed down the business, or the supplier is not traceable. Only in these 3 cases can a reversal of ITC be asked from the recipient of the input tax credit. Other than this, the recipient of the input tax credit cannot be required to reverse the input tax credit just because a supplier has not filed his GSTR 1, 3B, or there is a mismatch between 2A and 3B. Friends, there was a similar issue when we represented the matter. So my taxpayer whom I was representing, he was very confident. He said, sir, the supplier is still traceable. The supplier's place of business is still there. But the department has cancelled his registration. They are inquiring with him, and therefore the department is asking me to reverse the input tax credit. In that case, it was because the supplier's GSTIN was cancelled ab initio by the department. What we did, maybe you can take a similar shelter, is that we asked the taxpayer to click photos from distance, of course, of the supplier's place of business, where the supplier was still existent. And we produced it before the authorities. The gentlemen see that your supplier is still existing. And therefore, it is your mandatory duty also. First, inquire with the supplier. And only if he does not pay the tax, then only we are required to reverse our input tax credit. So, friends, the law, the GST, income tax, any tax law should not be seen just in the black letters or in the letters of only what is written in the law. There are various other laws. There is a business environment, and the law is made for the business. The business is not made for the law. Therefore, these persuasive evidences are very, very important. Similarly, in case of ab initio cancellation, what is ab initio cancellation? Say that your supplier's GSTIN is cancelled today by the department. It is cancelled with effect from 1st of July 2017. The Honorable Calcutta High Court in the case of LGW Industries on your screen has held in a very beautiful judgment. Let's see, whatever you have purchased as a taxpayer before today, say 3rd of December 2022, when the supplier's GSTIN has been cancelled by the department, whatever you have purchased as a recipient before today, all of that should be allowed. Because before today, you could not imagine that the supplier's GSTIN would be cancelled by the GST department. But yes, after today, when you know that the supplier's GSTIN has been cancelled, After today, if you purchase any goods or services from the supplier, after today, your input tax credit is required to be reversed. Friends, similarly, many a times, Section 122, 1 capital A is invoked by the department, wherein in case of certain bill to ship to cases, now the allegation is generally in bill to ship to cases or in any other cases where the supplier is at default of not paying the GST to the government, many a times the department comes to the recipient. Right? In our case, what happened that our taxpayer say was located in West Bengal, his supplier was located in Tamil Nadu, and his supplier was located in, say, Maharashtra. So now the taxpayer under scrutiny located in West Bengal, say manufacturer, he got the material from Maharashtra, but the bill came from his supplier in Tamil Nadu. The supplier in Maharashtra, he made a bill back to back on the my supplier in Tamil Nadu. Now, if say the supplier in Maharashtra, he defaulted in payment of GST to the government, then the department came to me as a supplier alleging 122 1 capital A that you are the beneficial owner. Yes, I am the beneficial owner, but there is a prerequisite in 122 1 capital A that it has to be proved that I am the mastermind of the transaction. In case it is not proved that I am the mastermind of the transaction, just because my supplier has defaulted in payment of GST to the government, that the department cannot come to me. It has to first go to my supplier. If my supplier is missing, if my supplier has closed down his business, if my supplier is insolvent, then yes, I can be approached. But if my supplier is still existing, then I cannot be approached as a supplier. This is our respectful submission. Friends, yes, do keep on typing your questions in the chat box. We will take all the questions at the end of the session, right? I mean, this is the beauty of, these are the benefits of attending a live session rather than a YouTube live or recorded session. Another issue, friends, before we go on to income tax issues, we will discuss few more critical issues which will be litigated going forward, and therefore we would suggest that all the company people who are looking after the GST departments or all the consultants who are here looking after the GST compliance of the clients, please be aware and please start this compliance from now, because this would be future litigation. In case of outward supplies, you are matching GSTR 1 with 3B. But even in case of inward supplies, please make it a point to match your inward e-way bills with your inward supply invoices. In case your supplier has not filed his e-way bill, then there might be an allegation that there has been non-receipt of goods and an allegation on the basis of section 122(1). So matching of e-way bills for your inward supplies also is required, and this can be the future litigation. Again, we have deliberated this long time that please now that the e-invoices limit is reduced to 10 crores. In going forward, it may further be reduced to 5 crores. Please make sure that your suppliers who are required to file e-invoice are filing e-invoice and you have got the e-invoice. If your supplier is required to generate e-invoice and they are not generating e-invoice and you are taking the input tax credit, well, then your input tax credit would be denied. It is very, very simple. Go to IRP, search the GSTIN of your supplier. In case your GSTIN of your supplier is available on IRP and he is not giving you an e-invoice, then you must act against the supplier and not take the input tax credit on those suppliers till you get the e-invoice from the supplier. Also, friends, for large companies, even MSMEs, I would suggest for your large suppliers, please do physical verification of your invoices. Take photos of their place of business so that tomorrow you are protected. In case your supplier closes down his business and does not pay the GST to the department. There are various other issues you can go through at your own pace. Because last 15 minutes we have to keep for questions and answers, and therefore we would like to go to income tax or direct tax issues. Friends, recently there has been a landmark judgment by the Honorable Apex Court in the case of Singapore Airlines in the matter of TDS under Section 194 capital H, right? So, what has been the judgment? Let us understand the case first. So, 194 capital H requires that in case you are the recipient of services of a broker or an agent and you pay a commission to your broker or an agent, then you need to deduct TDS under 194 capital H. Explanation to 194 H provides that even in case you are a recipient of such services, or even in case you are paying this commission or brokerage indirectly to a commission agent, even then TDS under 194 capital H needs to be deducted by you. The words indirectly is very, very significant in this explanation. And in this context, let us understand with this table the background of this case, because this case would have implications on other TDS sections also. We would discuss that. Let us understand. So what was the case initially? You remember when the airlines used to pay commission to their agents? How they used to do? You remember in the olden days? I mean, olden, I can say, 15 years back, they used to have hard copy of the tickets, right? You used to get leaflets. Now, the airlines used to give these leaflets to the agents, which used to be governed by IATA. They used to set a net fare. There used to be a base fare by IATA. And gentlemen, airlines, you cannot sell your tickets at more than this value, right? On your table, you can see IATA base fare is 1 lakh rupees. Say. Now, the airlines used to say that, okay, 1 lakh rupees is my maximum, which I can charge. But my net fare, my fare, best rate would be 60,000. Now, agents used to play around. There used to be an arbitrage opportunity. On your screen, you see, when 1 lakh rupees was the base fare, the airlines used to say that, okay, we will charge 60,000. Now, whatever you want to recover, you recover. Now, the agent used to sell it at, say, 80,000 rupees, that ticket. So, on the net fare, the airlines used to devolve 7% commission on which they used to charge TDS. Now, if the agent used to get 80,000, they used to sell the ticket at 80,000 rupees. Now, this agent used to get 20,000 rupees extra. The question was whether the TDS on this 20,000 rupees extra charged by the agent, that needs to be deducted by the airlines or not. Because the airlines contention was that, gentlemen, I have no control over this transaction. Just like presently 194.0. Now in 194.0, in case e-commerce operators are there, they are saying, gentlemen, the sales, say if you are an e-commerce operator, you are Amazon. Now say ITC is selling to a customer. It's or Dell is selling a laptop to a customer for 1 lakh rupees. Amazon is just getting its commission of 1%. Amazon says that, gentlemen, directly in some cases, the customer is paying to Dell. I have no control over the transaction. How do I deduct the PDS under 194 on the entire value of the supply of laptops? Similarly, in this case, the airline said that I have no control over the transaction. The Honorable Apex Court said that, see, in case a principal agent relationship is determined, right? In case you as a principal, or if you as a principal in our case, then if you have agreed with Amazon, in this case, the Singapore Airlines has agreed with the agent that, okay, you are my agent and I will pay you a commission. Then you should have the data also. In this case, the ethics code said that you already have the data from IATA. So I will not. Right? See, there is some issue in the. Mostly, am I audible?
Yes, sir, you are audible.
Yeah, sir, you are audible.
There is some problem in the screen.
Now your voice is clear.
Okay. There is some problem in the screen sharing. I'm trying to share the screen again. Okay, so I feel that there is some problem in the screen sharing, so I will deliberate. We'll, of course, distribute the presentation, right? So in this case, the Apex Code said that, you see, if your principal agent relationship in this case between Singapore Airlines and the agent, that has been determined already, then TDS needs to be deducted and the data needs to be collated by the principal somewhere or the other. In this case, the Singapore Airlines already had the data from the IATA, who regulated the entire transaction, right? So even in case of 194.0 today, it is the principals or the e-commerce operators in 194.0 case liability to take the data from the principals for the transaction and deduct the TDS accordingly. Now, Another thing is that what was argued that, see, these are two separate transactions. Singapore Airlines has already sold the tickets and agent now is selling the tickets to the customers. They are two different transactions. The Apex Court said nothing doing. That principal and agent relationship still exists. There is no transfer of title. So this brings us to the next issue currently. Even in 194C cases, many a times we argue that, see, this is a for reimbursement of expenses. Now under 194R also, we argue that this is a reimbursement of expenses and no TDS under 194C and 194R should be deductible. Friends, in this case, we must ensure that the invoice by the supplier of services or goods is made directly to the principal and not us in 194, 194 C and R cases, right? In case the principal agent relationship exists, TDS is still required to be deducted even in case of reimbursement of expenses cases, right? So now even in 194Q versus 206C1H cases, we all know that in case today, in case of sale of goods, if the recipient payer of the value of the goods does not deduct the TDS under 194Q, then as a seller, you have to charge TCS under 206C1H. Many a times the question is asked, but it is not in my control. This transaction, whether the recipient would deduct TDS under 194Q or not, is not under my control. Well, after this judgment, a shelter can be taken that in case there is a transaction, then you as a supplier should have control. You cannot argue that I do not have control over the transaction. And therefore, that liability under 206C1H would still exist, even in case your recipient has not deducted TDS under 194Q for sale of goods. So this is a very, very important judgment by the Apex Court in the case of Singapore Airlines, and it would impact other TDS TCS provisions which are in vogue currently. Now, friends, next issue in income tax is that many a times we get notices under 142. 142 requires that in case you have not filed a return of income, then within the same assessment year or for 3 previous previous years prior to the current previous year, the officer can ask you to file your return of income, or even in case you have filed a return of income but missed certain transactions, then the officers, your JAOs, can ask you to produce information, explanation, transaction details, and most importantly, books of accounts. Well, the power to requisition books of accounts are not available under 148 or 143 too. And that is why most of the times you would be seeing practically that you would be getting a notice, a combined notice under 148, 143 2 with 142 1. Produce books of accounts, information, explanations, etc. Sometimes we skip to produce the required information as required under 142 1. And thereafter, we run a risk of base judgment under 144. So, a violation of 142 1B can be inflicted with a penalty under 272 1B. Not directly, even indirectly. In case you do not produce any information explanation which is required by the officer under 142 1B, 142 1, then penalty under 272 1B to the extent of 3 times the taxable tax amount can be inflicted not only 110,000 rupees for violation of 142(1). So you must, even if you cannot collate all the information, you should give a point-wise reply to 142(1) notices, right? And you should address all the required information and give all the required information, address all the points which are asked by means of notice under 142(1), right? Now, many a times we see that the notices under 142(1) allow you only 2 days time to reply. We reply also within 2 days. A taxpayer replies within 2 days. Thereafter, when the issue arises, then in the appellate stage, we take up the issue that of natural justice. We take up Article 14 saying that we were not granted sufficient time. And it is very important that at the very inception, at the time of replying to 142(1) notices, we take up the issue and invoke the alternate partem. I am repeating, the doctrine of the alternate partem requires that sufficient time be given to reply to notices. So at the time of reply to the notices, you must take this ground in case inadequate time has been granted to reply to the notices. In case you reply to the notices, then you cannot take up at the appellate stage that I was not given adequate time. The same was decided by the Kerala High Court in the case of Srinivas very recently. There are various other issues of service of notice. A service of notice cannot be done to your associate. In case a service of notice is done to an associate, many a times whoever goes to the department, because it is the last day of issuing of notice, they just hold service the notice to him. That can be contested in case service is not done properly. Now, also again, many a times we take grounds that okay, I was sick, the taxpayer was sick, and we produce medical service certificate at the appellate stage. Well, that is not acceptable. At the appellate stage, you cannot take up these notices. So we need to be very, very meticulous while filing our replies under 142(1) notice, because this is the stage where an adequate opportunity would be given to us, especially in the faceless era, and we should not try to take up frivolous issues at this stage. In case we have a genuine medical issue, we have an issue where notice was not given properly, we do not get time, we should take up all these issues at the assessment stage itself rather than taking it up at the appellate stage. Friends, another important issue in case of commission under allowability of commission expenses, we are seeing many of the times the AOs disallow the commission expenses, alleging that the services were not at all received. Well, again, please understand that in case you admit all this, even in the income tax, then you may get a corresponding notice under GST also. So, how to defend commission payment at the income tax level? You can rely upon the judgment of the Honorable Apex Court in the case of J.K. Woolen Manufacturers versus CIT. I'm repeating, J.K. Woolen Manufacturers versus CIT. The Honorable Apex Court has laid down a doctrine. In case of related party transaction, in case the commission agent to whom you are paying commission is a related party, you need to ensure three things. First, you need to ensure that the services have been actually received. You have to have agreement. you have to substantiate that the commission agent had the requisite expertise to give the services. Say, for example, the agent, you are giving certain sales commission to the agent, and you have to prove that the agent was actually related to that business from the past many years. You need to have an agreement with them. And in case an agent has the requisite qualification, say in case the agent is a agent of tea, and you are giving him commission for selling of tea, and if he is enlisted on the Tea Board of India, then that would be a persuasive evidence. And as per the Honorable Apex Court's judgment in the case of JK Woolen Manufacturers, the commission would be completely allowed, right? Similarly, in case you are paying the commission to a non-related party, then you need to ensure that the genuineness and the creditworthiness of the agents by means of their PAN numbers, by means of the names, addresses, and the physical presence at the respective addresses, and the details of how the commission are worked out. And in case you are paying the commission, such commission to other agents, you need to substantiate that you are not paying commission just to this agent with differently than other agents. So friends, these are the issues, and yeah, the last issue as per our agenda is in case of an international transaction, many of the times it is the department's contention that even in case of reimbursement of expenses, you need to deduct withholding tax as a on the payment of such reimbursement of expenses. Well, again, I would come back to my point, which I have deliberated in the case of Singapore Airlines in the Apex Court's decision. Well, you have to prove the agent principal relationship. Say, for example, you are selling you are rendering marketing services to the foreign party, and for rendering marketing services, right? Or you are taking marketing services from a foreign party, and to render those marketing services in a foreign country, that foreign party takes the services of certain other parties, or he takes certain goods in the form of standing from certain other suppliers, and that person who is supplying that standing, he is directly billing to you. Then he can prove that your agent can prove that this is a reimbursement of expenses for standing, and you need not deduct withholding taxes on this transaction under 195. This was held by the ITIT Mumbai in a plethora of judgments, the most recent being Spencer Stewart International, BV versus Assistant Commissioner of Income Tax. There are many other similar judgments in this regard, which under which you can take shelter of. So, friends, I think we have with this we have deliberated on all the issues under indirect taxes and direct taxes. We will take up the questions in the chat box. Right? Okay. So first question is, yeah, PPT we would share. Okay, Mr. Loknath says, if the import is done against advance authorization and also against payment of duty, any other than advance authorization, how do you substantiate the refund on export is from duty paid and not from advance authorization to avail the refund? Will the department still disallow the refund under 9610 on the hypothecation that export is out of advance authorization? With Mr. Loknath, well, this is disallowed. It is not a hypothecation. It is a mandate under 9610. And therefore, in case you are taking the benefit of advance authorization, you cannot take the benefit of refund on payment of duty. But of course, you can take GST refunds without payment of duty, right? So, to this extent, in case you have taken such a refund, this needs to be reversed. You can apply for the refund without payment of duty. Okay, Romil Patel says that one of my client registered under GST as XYZ Enterprise has two sons and they are not registered under GST. They brought a shop which belongs to all three of them. So rent is liable to on rent, is the client liable to collect GST on the rent? And if yes, then what will be the impact on GSTR 9 as he has not collected and paid GST on rent? Well, in case, say for example, the total rent is 50,000 rupees and your client share is 1/3, then if this is the only income of your clients, then your GST is payable only on the part of the rent which is applicable to your client, in this case 1/3 of 50 lakh, and only then you need to take registration. If you have taken registration, then of course you have to pay GST on 1/3 of this. If your client has not paid GST on rent, then in GSTR 9 you need to make the payment in cash and you need to report in GSTR 9. There is no escaping this. Mr. Loknath says E-invoice not furnished at the time of inspection at in the transit of movement, but manual invoice and e-way bills are accompanied. Whether the check post officer can levy penalty? Yes, he can levy a general penalty, but not a penalty because practically there is no defalcation in the payment of the taxes. It is just a procedural error and therefore an e-way bill is made. Therefore, no penalty, a general penalty of 10,000 can be levied, but 200% penalty cannot be levied in this case. It can be contested. Mr. Sanat Kumar says in case of construction services is under GST to be registered in each construction site for procuring materials? Not at all. For the full state, you can take one GST registration and each site can be added as a place of business. Mr. Minakshi Sundaram says, sir, our client labor contractor is raising tax invoices for providing laborers to various activities every month. As per the work order of the manufacturing companies, the contractor has uploaded his tax invoices in GST portal every month. The manufacturing company is raising tax invoices on the laborer contractor for the food provided to the contractor every month and available in 2B as the input tax credit. Kindly clarify whether input tax credits are ineligible. The manufacturing company is raising tax invoices on the labor contractor for the food provided. See, I mean, there are various alternatives in your transaction, but in case the manufacturing company is providing you invoices, then you need to pay the corresponding GST on those invoices as a supply of food, and of course you can take the input tax credit. But in case you are not paying the corresponding input tax credit, taking it as input services, then you cannot take the input tax credit. Okay, Mr. Ramesh said you are referring to circular 170 issue raised in Telangana. Can you elaborate on the issue, how to address it? Well, Mr. Ramesh, the issue, some of the state governments were asking you to file for the credits for financial year 21-22 invoices in the month of November. Now the return for the month of November has elapsed. Nothing can be done now. In case you have noticed, then maybe a general penalty of 10,000 can be invoked in this case. Ms. Swagata says we are providing security services to a client in Maharashtra. We have registration in Maharashtra, but client has no GST registration in Maharashtra. Only available GST registration in West Bengal. We have GST registration of West Bengal. Can we issue a invoice from West Bengal to West Bengal? Place of supplies as Maharashtra. As per GST rule, supplier registration and place of supply as the same state. It will be intrastate service. Kindly suggest. Miss Swagata, no, you cannot do that because the supplier of service is effectively your registered office in Maharashtra. You cannot issue the supply from your West Bengal registration showing place of supply as Maharashtra. I think the same query was asked only yesterday by one of the clients to me. In some other cases, the same was my reply. Okay, Mr. Ramesh says CGST department asking for endorsement of SEZ supply made to suppliers. Yes, as per rule 1689 of CGST, which is being insisted for outward supply. Yes, Mr. Ramesh, I had a similar issue in Bangalore. You can refer to instruction number 9 of GSTR 1, where supplier is not even required to file the same in his GSTR 1. You can take the shelter under other whatever contentions, legal submissions we have given. And we have, we'll share the PPT with you. We have used the same defenses and the case was cleared. In case it is still not cleared, it is better to take a declaration from your supplier just in the interest of reducing litigation. Okay, you say our audit is completed by CGST department and we have reverse credit notes issued by the supplier from all other ITC. However, audit team raised that para that it should be done as per reversal 1970. There is no reference of credit note. As per 170, credit note is a reduction, not reversal. Further, no. Mr. Ramesh, credit note is a reversal. In fact, if you see it is auto-populated in 4B2, it should be done as a reversal. Even I think in circular 170 it is mentioned, but it is to be shown as a reversal in my respectful submission. Mr. Rakesh Bandari says, sir, LS share, okay, share the PDF, yes. Mr. Loknath says whether appeal can be decided without giving a personal hearing when specifically asked, since it is in no way the petitioner would come to know the appeal has been sent written submission while framing the order. So whether appeal can be decided without giving a personal hearing when specifically asked by the petitioner, since it is no way the petitioner would come to know the appellate has seen the written submission while framing his order. Absolutely. This is under income tax. Yes, absolutely under income tax. If you have prayed for a personal hearing, appellate authority cannot give issue an order without personal hearing, even in faceless appeals. You the can take shelter under Article 14 of the Constitution. Mr. Rajesh says rectification of invoices filed on 30th of November, but the entries to be reflected in the book financial year 21-22, and if not, then you can reflect the entries till 31st of October and rectify till 30th of November. RCM of 1920 in the case of builder on TDR, whether payment to landowner in August 19 and if RCM paid now as per office notice with question RCM paid. RCM you can take the credit on the date of the making of the self invoice under Section 31(3)(f). You can take the credit even now if self invoice is made now. The department can dispute, but it is a contestable case, Mr. Rajesh. Ms. Swagata says we have received a scrutiny notice for financial year 17-18 for excess ITC to the supplier, not submitted the GST returns, but all available documents with available to us who will be penalized. Of course, the supplier. In case the supplier is existent, of course the supplier will be penalized. I have given you DY Bethel case, May 2018 press note, etc., etc. You can refer to those as per our PPT. Okay, Mr. Gowda says, is tooling development charges received in foreign currency from export customer is chargeable under RCM? You are giving the service, so it is export. Then there is no RCM. RCM is on import, please. M. Shankar says supplier invoice is last month, but MTL received next month when ITC to be taken whether last month or current month. When you have received the service, you have to take the invoice subject to GSTR 2B. In case builder, we can provide the output liability based on received or point of taxation. Point of taxation, Mr. Rajesh. Mr. Rakesh says there are demand notices in income tax and is pending with the assessing officer. So how can it be taken with them so that it gets closed under 272(1)(a)? Please send reminders. Please send letters to PMO. We have done that and cases are taken up. Please do that. Yeah, PPT would be share. One more case, that is we have got demand for assessment year 22-23, wherein we have mentioned wrongly date of self-assessment challan, but we have disagreed. Who has the right to correct it? As shown in the portal is with CPC, but when we have coordinating with them, they have stated it can be done by the assessing officer. The notice is under 143(1)(a). Yeah, assessing officer would has the right to do this. Please connect with your jurisdictional assessing officer. PMO mail ID, you can get it online. We would share it online, offline also. Please send us a mail in this regard, please, Mr. Rakesh. So we have answered all the queries. Friends, thank you very much for this uh, overwhelming response and such a interactive session. Thank you very much. We look forward to our future sessions and your participation. Thank you very much. Over to you, Moshmi.
Thank you, Vivek sir, for this wonderful deliberation. Thank you all the participants for attending the webinar. We conduct such webinars every month and we hope we will get you in the upcoming webinars as well. We will shortly share PPT and video link to all the participants. Thank you.